What's up, my dudes? Welcome. You guys have made it. I fixed my sound. So, what a day. What a day so far. What in the heck is going on, my dudes? Let's do some math real quick. So, we got a big day. BBT Todd's heading in. We got some new GPUs coming in. I'm going to be putting together a new 14 card mining rig for you guys this week. So we have some 3090s, some 3070s, 3060 Ti's coming in. I said 3070, yeah. No 3080s. I don't have any 3080s right now. But I wanted to talk through what's going on with these fees today. They are gone bananas. And anybody that was seeing the post that I had earlier today has seen this. I posted a little spreadsheet. I'm going to show you guys how I do this. Wow, there's a lot of stuff here. You know what? Let's just build it from scratch again. The ETH. Let's do it right now. And we'll just go to this. He's sitting at 1726. Fees are still up pretty high. I'm going to show you guys how I pull stuff in to do some calculations that I did earlier. So the GUI is down to about 450. It was about 700 GUI earlier. Obviously, it's a pretty large market drop today. If you had limit orders on Kraken today, you guys got some serious ETH fills. I think ADA dropped down to 15 cents today for a brief period on a couple. I think it was just Kraken, but there might have been a couple exchanges that followed them. ETH dropped down to $700 on Kraken today, briefly, and then bounced back up. So if you had limit orders in there, you got them filled pretty cheap. There's obviously a lot of automated market makers that do work whenever stuff like this happens, and I think that's driving a lot of the growth here on the fee calculation. So let's take a look at some of the latest blocks here, and let's do some math. What we're going to do is look what we're looking at right now while you guys are on. Let's do a refresh here. Looks like their site's having issues here. Let me go back. 1 minute ago. Did ETH's network just freeze up is the question, or did the site freeze up? Because we should see seconds ago. Okay, for whatever reason, it took some time. It took some time here. ETH's running slow right now. Let's go down to here, hit 100 records. I'm going to show you guys how I kind of parse this in. So we're going to do a real-time average right now. What's going on here? This is just one way to look at that. You got an 11 ETH block. We're going to copy this. We're going to bring it into Excel. I'm going to bring this up here. Let's do new. I'm going to paste this in. We're going to get down to the bottom here. We're going to go to another page. I like doing at least, let's do a full hour. What's been going on for the past hour? That's at 45 minutes. Let's do one more after this. Paste this at the bottom here. Delete. And let's go one more tab. I'll look at your guys' chat stuff here in a minute too, so have your questions ready. Copy. We're going to come into here. We're going to paste one more. All right, we're going to delete this. The only other thing you need to do when you do this, if you do this in Excel, you could do this in Google Sheets too. You come up here, double click, and let's take on I here, we're going to do a Control F, and we're going to remove Ether, the name Ether. We're going to replace all. Okay, that gives us to, that's a number. Now I can quickly do an average. So this is the 1 hour 12 minute average is 300 blocks average. So ETH reward, let's just do that whole column there. 9.13 right now is our last hour average of ETH reward. Okay, so it's quite a bit. It was up to 14 earlier today, a couple hours ago. And then let's take a look. Here's what I like to do. I like to see who's been getting this reward. So copy that miner thing there. I pasted it into another sheet here. And if you highlight that and you go into data, filter, advanced, unique records, you can get the unique record distinct list. You copy that, control copy, paste that in over here. kind of expand that. And then what I can do now is, now that I have that distinct list, I can go through and I can do a sum if. Sum if the range of these miners, comma, the criteria is what we're looking on that distinct list, comma, the sum range. What are you trying to sum? You're summing that reward range. That's going to go like that, okay? And then what that's going to allow me to do is keep, since I'm doing the full range in the way that I'm doing it, I don't have to lock those fields. And I can come down here and give me all of the participants and what they got. Now that just filled in. So that told me how much ETH was distributed to each of those pools or addresses. If I do a sum up here, and I want to look at the sum of that, right, of all those together, it's going to tell me how much was the yield over the last hour and 12 minutes. So the total yield was 2,740 ETH, okay? And of that, I can go in here and I can say, what was the percentage of this? This divided by this. And then I can go and put a percentage in here. Let's go over here and put a percentage. And we're going to take a quick look at the percentages that just occurred in the distribution. Hold on. It kept moving. So I need to lock this field here. Now I can go down. There we go. More like it. And then let's grab these are percentages. This is not a percentage. This is just a number. Let's call that general. And then these ones I want to say, give me a few numbers here. Here we go. And then if you want to, here, let's move this, let's move this over here, paste right here, because we're going to say this is the percentage distro. This is count ETH, count of ETH that they got. And then you can do some pretty cool stuff real quick to see what's going on here with going like this. And then you can insert a little, let's take a look at this from a picture standpoint, and then let's make it look like that. All right, there we go. That quick, bros, my dudes. Here, let's do it this way. There we go. And like that, we have a distribution model of the last hour and a half of what's going on. So Ethermine has about 25%. Sparkpool's got about 22%. Yeah, 8 a.m. there was 112 ETH block, which is cray. We can see what the largest block here was by going over here and putting a filter on it. Let's take a little quick look-ski over the last hour and a half. The largest block reward here, let's just scroll down. That was about 12.56. So, pretty nuts. I mean, this is about 2.5 times, 3 times what ETH's been putting out over the history. I'm doing a longer model update for the mining spreadsheet for folks that have not been tracking. I left the link in the description below. So I'm putting in 2 models in prep for the Ethereum development conference meeting, or the Ethereum cat herders meeting that's on Friday, that will take a couple different options that I think from yesterday's discussion we're coming up with. One of them is going to be around spreading the ETH reward, or the ETH transaction piece, instead of burning it, to spread it across folks through a distribution model that's getting more detail written into it right now. Or we accept as a wholesale the mining we accepted EIP 1559 as it is wholesale, with a plus on ETH reward to the blocks. So we would go like a +1, which would make Ethereum mining reward 3 versus 2, and then we would accept the transaction burn, right? This is being done up in a model to see what has been our average price, or what's our average yield since, I'll say, August, where this became kind of a thing, right? We've only experienced high ETH transactions for a little less than a year, right? When we get to about August, July-August timeframe is when, DeFi really started to ramp up, and we started seeing the lift in the transaction fees. Some of it was actually to this scale, right? But mind you, that time it was around $300 ETH price. With $1,800 ETH price, it just expands the size of pie, the amount of folks that can participate. So there's been some pretty good conversations in the ETH Dev Discord room. I'm seeing some of the perspective from the developers, and I'm cool with that. I think EIP 1559 by and large has a lot of good things in it. It's just the fee burn that's the problem, right? And it's not even just from an enrichment standpoint from a miner. It's also related to the attack vector that I'm fearing could happen to ETH. And nothing would be worse than ETH getting a double spend or ETH getting a block reorg, which right now is incomprehensibly not going to happen, right? The incentives are done right. There's a growth pattern that's a rolling wave that's following in behind ETH, with more and more people participating. The attack vector on ETH is just not there. If there's an arbitrary reduction of up to 40+%, just out of the blue, the dynamics change. So those are the concerns from that I'm tracking. And I want to make sure that a model represents that example, because the one thing that is absolutely finite and for sure guarantee is that the scripts, the know-how, and the reality that these networks before have been attacked. This isn't a theoretical attack. A lot of the stuff that's coming out with EIP 1559 are all these theoretical things that could happen. Oh, the miners are going to create their own fork. They're going to do all this other stuff. The most highest likelihood from my point of view is that if you disenfranchise 40% of a network, and there's an alternative option to move over to, if that's a brokerage service like NiceHash or anything else that's paying higher rewards. If that's a brokerage service, the hash rate could be used nefariously. And as a miner, as a medium-sized miner, as a home miner that might be using something like a brokerage service, if somebody comes in and does pays $40-50 million buy order on hash rate at 2 times the hash rate price, and you're like, hey man, I should be mining NiceHash, I can make twice the amount of money. When you fire that up, it's going to look like you're mining ETH, or it's going to look like you're mining some other network, right? Unless you're watching it 24/7, you're not tracking where your mining hash power is getting pointed to. That's part of the risk with using a brokerage service. And if 40% plus is disenfranchised, and then let's say ETH pulls back some in July, now you have a situation where the people turning off their miners because now it's not profitable for them because there's a price pullback, plus an artificial reduction in the amount of yield pushes more people down to where they're not doing. But then you have this other scenario come up where everybody's kind of looking to see if they're going to turn their miners back on, and now you have the brokerage services offering well, I can go to that and pay, just point my miner there, and I'm actually getting paid a pretty decent reward. And the whole time a nefarious actor is using a script to try to attack ETH. And quite honestly, it's very possible. With the growth that we've seen in the Ethereum network to date, we are at all-time highs in hash rate. That means that is giving you a base factoring of a size of pie of the potential amount of miners out there. And it's not that they're malicious. It's that the tools out there that we will point our rigs to can be retuned to point without a typical miner really tracking what's going on until after it's occurred, right? If you're mining and you're watching it, you think you're mining ETH and you're getting paid for that. The whole time they're mining a new chain that isn't broadcasting, right? And it comes down to the dynamics of that. And I think that's a good video I want to do. I want to do a graphical representation of how that works, how it would look on your miner, and for you to understand where that hash rate's getting pointed to. And from a nice hash standpoint, I'd like to see something come out from them, if possible, of what they can do to try to prevent that. So part of this could be, hey, if we see that they're mining, doing a shadow mining, we're not seeing the node that they're broadcasting to. Maybe there's an opportunity to maybe mitigate this at the brokerage level. But this is the attack vector, and it's happened over and over again on different chains. And Ethereum is not immune to this if they force a situation where an actor can force project a huge amount of hash power and 51% attack it. And I'm going to tell you, it only takes one block reorg to cause an absolute disaster in the space. And why you would ever want to risk a $500+ billion network to race to the bottom on security value. Some of the logic and the language being used is, we overpay for security. Said no one in any sector on the planet besides Ethereum, development. Like, why would you want to have less security on your network? Like, it's the most nonsensical thing I've ever heard in my life. Like, and anybody that has DeFi and money locked up in liquidity, I would question everything if that's the representatives are telling you we want to pay for the minimum amount of security. And for what reason, other than the only counterpoint to this is to raise the Ethereum price artificially, because you're creating a supply issue. And I just don't see it ending well. You're betting there's a difference between, they say there's gambling in life and then there's investing in life. And the big difference is gambling is you're probably going to lose. You're taking a higher risk for possibly a higher reward. Investing is a strategy over time where you've done a strategy that you're setting the chips in the right place to grow the base and to maybe potentially, have expansion in some way. This just feels like a gamble. And mind you, if this was through, miners obviously would be impacted, but it's just a risk. So it's like, how do we move forward with this? And if there's a compromise where 1559 goes in and there's an adjustment of maybe the reward by +1 at a minimum, I'm going to have a few different figures in the model that will calculate kind of the probabilities of like how much hash rate would need to come off. It gives us a more fixed understanding to strive to, meaning the network will contort to supplying hash rate for a particular amount of emission. It obviously changes with price, but like it can't be this is the way and there's no compromise. I think with the level of scrutiny that's being placed on this right now, there's just no way 1559 is going to go in the way it is right now without a more substantial fight, as I would call it. And it's not even a fight for miners at this point. It's a fight at looking at the data and going, wait a minute here, you're going to disenfranchise too much, and you're putting the network at risk on an actual factual thing that has occurred on other networks, including and not limited to several eTash currencies. ETC has had several attacks like this, and yes, their network size was small, but if you disenfranchise like potentially 50% of it, and there's about 150 extra terahash worth of GPUs out there on other networks, that if somebody puts a high enough incentive, a high enough carrot out there, that those could be additional force projection. And then that's not even counting things that are not calculated right now, are powered off if the incentive's high enough. I don't understand, and I'm trying to understand, and I'm trying to wrap it around data, but the argument is not strong enough, in my opinion, on why they would want to even risk it. I get the fee burn, and I get a reduction in supply may drive demand, but we've had 2 supply reductions in Ethereum, and with regards to inflation. And I think that model works well if you have a fair launch, fair market algorithm. ETH was a pre-mine of 70 million ETH. So Ethereum Foundation and several other folks have an opportunity cost there of, like, if I reduce the amount that's moving around, and ETH goes up, the original pre-mine is coins go way up, right? So, you know, it needs to be in full disclosure if that's what's going on here, you know, that because that's what it feels like. There's no other reason to push and risk the entire network. And as a builder of in Ethereum content, as a builder in other deployment stuff with regards to you know, modeling and other things around Ethereum, as a holder of ETH, as a potential 2.0 holder, like it just feels not genuine, if that makes sense, because the arguments are not being posed. And maybe Friday helps clarify some of this. I'm hoping that's what I'm hoping to get out of Friday as a participant in this. I want to make sure that the models that I'm basing my opinion on some of it are opinion, and then the differences are forecasted on history, right? So I'm trying to be pragmatic about it. I'm trying to understand. I think most of 1559 is a good thing. It should ship forward. The burn is the only issue. I've said a lot. I'm going to give you guys a second. We're 22 minutes in. I want to try to make this just 30 minutes at max. I'm going to take some of your guys' some questions, but I wanted to make sure I had a video today that talking about this. We're going to be doing a build and some fun stuff in a little bit, but what are you guys thinking here? Hopefully, am I completely gone crazy on this, or are you guys seeing what I'm seeing here? Yes, Friday's meeting is going to be streamed by ETH Cat Herders, I believe. I will not be streaming it. I'm going to just put my effort on. I will retweet it and make sure you guys can see it and all that. It'll probably be the largest meeting that I think they've ever had with regards to participation watching. So I'm just looking to see if you guys are trying to. Thanks for fighting for the little guy, man. The mining community is a very tight-knit community. The GPU mining community is a very tight-knit community. ASICs, I mean, I don't have a ton of exposure with ASIC community as much as I used to. ASICs are a lot more just down to business, and there's not a lot to talk about. Not a lot of configuration management and all that when it comes to like the miner itself. And there was a statement that was made today in the ETH Dev meeting that I found very interesting, that I've never heard it presented in this way. But the GPU mining community is pro-long all cryptocurrency proof of work mining. The ASIC community is pro-long cryptocurrency, or pro-long algorithm specific long, right? So the interests are different. They cannot be, they're not interchangeable, you know, in and out of each other. It's just because GPUs can go to other networks, right? They can be redeployed. They can be also resold for other, you know, other main tasks like gaming and stuff. So it's just a different dynamic, but they're all mining, proof of work mining is always bottled into the same thing. And it's just genuinely different. There's a completely different community structures too around it. Do you think the climate has changed the incentive to push 1559 forward? I think 1559 is going to go forward, but I think it's going to go forward with a compromise. I don't see how it doesn't at this point. Sorry, but regarding 1559 plus 969, what's your stand there? I don't think ASIC resistance is a valid argument in ETH right now. I really don't. I mean, and it's not that I'm not for ASIC resistance. I think that there was a time and a place for ASIC resistance in ETH, and I'm interested to see some of the ASIC participants being on the call. But I think that the time and place for ASIC resistance was in 2018 when we had the E3, you know, situation, or, you know, when the E3 was starting to be produced, they either needed to touch it there, or when the E3 was coming out of its 4 gig DAG issue and pre-taping out and production of the A10s and A11s. from Silicon. So I think that there was a good period there to where Silicon was fighting the fight to try to keep ASICs on, but ultimately if it would have lost, they wouldn't have been out that much. Whereas right now, anybody that has went through all the tape out, investors that have bought, there's people pending orders. I think you're in a situation where you're disenfranchising an entire asset class of folks that have spent time and money. And I just don't see how, as a miner, understanding that perspective, I don't see how we can disenfranchise them now that if this was the first issue on it and we never brought it up, then I think that it's a stance, are you with ASICs or not? But I think ETH did that on our behalf and said, hey, we're not going to mess with the network. And now that would be, it's kind of like it was all accepted that was a thing, right? So now to come in and say, oh, well, we're just going to kick ASICs off, I think it's just the wrong timing now. I think it's that ship has sailed as far as I'm concerned on that. So, I mean, and as a GPU miner with, like, we have one E3, and actually BBT Pring is bringing it out. He's bringing it down right now from the farm because I was going to play around with it and have a stream with you guys because it doesn't work. Like, it died. So, like, another part, it's a GPUs die too, but, like, it lasted about 9.5 months and died, and it's just been setting up there. So, I was going to, pull the guts out of it, but I just don't see that happening. Just got into mining, nice timing. Well, for right now, I mean, it's not. You're still doing okay, Giorgio, and ETH isn't it. There's other things to mine too. So if you're a GPU miner, you should be okay. Where are you getting GPUs? Kyle Rogers. So we had ordered GPUs a little more than a month ago. We get most of our GPUs are ordered through MA Labs out of Chicago, which is a distributor. So it's the same kind of distribution that a lot of like Fry's and Micro Centers and stuff buy through. July is when London is ships. Yes. But so my position is going to be if we can have a compromise, if that's like a +1 ETH. And again, I'm going to have data around what that figure should be. Or maybe it comes out as like a +2 ETH, and then it has a degrading period through proof of stake, meaning it starts at, we'll have the 2 + 2 ETH on the ETH reward, and then over in amount of months, this was a suggestion, in amount of month, it does like a slow degrade, to where it keeps triggering like 0.2 ETH or something comes off each month. It allows this I think it allows the same kind of feature of the deflationary, but we at least have a schedule. That might be a thing too, but I think it's going to come down to a compromise. And if that occurs, then is it integrated in the clients, and can they include it in Berlin is the question. And could it come in 3 months? And why wait till July if it can ship as it is plus the ETH reward increase? Why is ETH going down? I think the whole market's going down. The only thing I saw in the industry right now was I think Janet Yellen came out and said something to the effect of Bitcoin, just said some stuff around Bitcoin and transactions not being usable from just like consumer standpoint. But that, I mean, from like U.S. government standpoint, I think it was the only thing that came out. I don't know if there's something else at play. I did see Kraken did a couple flash crashes. So if you had some positions on Kraken, especially with ETH flash crashed down to $700 on Kraken today. ADA crashed down to 15 cents on Kraken, which is just crazy. So, I mean, anybody that does any kind of dollar cost averaging buying through limit orders are getting their orders filled. Let's just say that. Do you think we'll be able to flash the BIOS on 3060? Probably not, because NVIDIA usually locks their BIOS, encrypts it. However, that doesn't mean that it can't be adjusted or changed through software. Or you can do an intercept, like the ETH pill on it. And it looks like the 3060 does pretty well right now with the Ravencoin right now too. Nefarious technology. When you set up MA Labs account, do you have to call, and were you able to get them online? I've just been unable to complete the online form with no response from them. I know that they're super busy, but no, we did it online, and then they called us, and we have an account manager. If you forward me the issues you're having, Nefarious, on BitsBeTrippin, my BitsBeTrippin at Gmail, I'll see what I can do. Let's see if our account manager can help you get processed. Can RVN take the place of ETH mining? Well, I have a model. That model that's below in the description has a tab that calculates what Ravencoin's price would need to be at the current hash rates. And bottom line, Ravencoin's price would need to be around 51 cents to break even on like a 50% absorption of all of ETH hash rate if the GPUs came over. And it's doing the calculations on stepping down the amount of hash rate required, because, you know, if something's like 30 mega hash on ETH, like let's say an RX 580 8 gig, it's about 12.5 to 15 mega hash on Ravencoin. So the hash rate differences a little bit. MA Labs stated to me, everything's out of stock, can't place any orders. Yeah, our orders were about a month ago, a little over a month ago. So it took us a bit. And then, we haven't seen anything since then. They've been out of stock completely. So I try to get some RTX 3060. I was going to put 3060s in my machines here, because like most of you guys have seen my gaming setup here, down here in the house, is pretty stout. So like all the gamers that throw a lot of hate, bros, like gaming machines galore, like it's what I do, my dudes. Like, I do find time to do some gaming, and we do use gaming machines. And I would like to I would like to pull some of the 6800s out of those, because I have 6800 XTs, 3080, 6800 non-XT, Radeon 7. I still have a Radeon 7 in a gaming rig. I want to replace that. I want to get that Radeon 7 doing some real work. And then, yeah, I have a couple still 1080 Ti's in there. All right, guys, I'm going to take a few more questions. We're going to wrap it up in about 2 minutes. Is it really tanking? I see what happens at 15. It's really tanking now. Well, let's take a look real quick. Let's do a refresh on the blocks here real quick. That was 45 minutes ago. Let's go to home. Still holding around 8.9. Price is pulling back. We're having a good bear trend right now. 14% on ETH. Let's do a coin market. Nice big pullback today. $52 across most of the exchanges. This is a little delayed. Let's go into the mining model and pull real-time prices. Yeah, it's 53 right now in the mining model. Let's let it refresh the APIs. We've locked this API down to 1 hour. I'm trying to work on the APIs for you guys, but in the ETH forecast, or the Ravencoin forecast there, this is what that is. ETH forecast. So there's going to be a new tab in here that I'm going to add for this analysis for the EIP 1559. You guys will see in here this week for this. So again, this is in the description below. So it's all pulled. All these are API pulled. We have the API pulling every hour right now. We're going to switch that down, probably a little less. $5 super chat, or £5 super chat. Hey, I'm new to mining. I'm using NiceHash with 3070. It's a good place to start. Thanks for the info. To start, you're going to get a better yield if you actually go through and set it up directly. Look at one of the last videos I've had. Son of Tech, Red Panda Mining have several videos too. If you repoint that, you'll get more yield. So you'll actually get the ETH, or you'll get the currency. NiceHash pays you in Bitcoin, and that Bitcoin over time has always been a good play too. It's just it's people's opinions of NiceHash vary. Mine it's a utility, but it can be used as a bad utility. So that somebody can repoint your hash power to do something nefarious. Right now, it's not necessarily a problem. Right now, most of the networks have fixed themselves to where this is not an issue. But with ETH's upcoming thing is part of the risk with somebody attacking the network. But NiceHash is a fine place to start. I would say you'd get a better yield if you actually point it to a particular network. Watch my last how to set up cradle to grave a new video, and you'll find that with the timestamps in there. Richard Swift. I haven't seen a little icon before, or an emoticon on any of the super chats. That's pretty cool. Like a boss, dude. Well, hopefully this information has been good for you guys. I haven't had 600 in a call in a bit. You guys will be able to rewatch this. You guys can hit the mining sheet. I see about 40 on there right now. Looks like 45 viewers right now on that. And if you save this link, you'll be able to see that analysis that I'm prepping for 1559, which I'll have various scenarios. I need to import all the block data in for that analysis to make sure I can average out. But the base figuring that I've done so far is since August, we've averaged about three coins per block. Mindful of the times like right now where it goes to 8 to 10. But I'll wrap this up. You guys might see something from us later tonight when we start peeling it back some of the 3090s and 3080 or 3070s and 3060 Ti's. Stay tuned. If you don't follow me on Twitter, you should absolutely follow me on Twitter. You'll see some of those numbers, and we'll let you know if you guys if we're going live tonight, which we should be, on doing the basic build of the 14 card build. So we're going to do 4 3090s, 4, I believe we have 4 3070s, and then 5 6900 XTs and 5 3060 Ti's. And it's just kind of a Frankenstein build just to see if we can get all those working together on a single board. I like doing all those kind of like edgeware. How complex can I make it and go through the pain of trying to get it to work? But it should be fun to see. Awesome, my dudes. Yep. And put in suggestions at the bottom of this video if you guys want to see other stuff in that.